Hello traders, this video is about Fibonacci bearish traders. In the last video that we already recorded, we were telling traders, we were talking about the Fibonacci bullish traders, but this time we will talk about Fibonacci bearish traders. The first pattern, or the primary market pattern for Fibonacci bearish traders, is the declining channel right here, you see. So we need a 3-point again to draw a bearish channel. So we will start from the top. You see, for the rising channel, we will start from we will join okay, a low and a higher low, all right, for a rising channel. For the declining channel, we will join, okay, a high and a lower high. So a high here, a lower high here. We draw this line because it's a bearish channel that we are about to draw. If this was a bullish channel, we'll start from the low and a higher low. So we'll join a low to the first higher low and draw the trend line. But because we are about to draw a bearish channel, we'll join, okay, a high and a lower high. So we have this blue line. Then we will choose only 1 point below to draw a line from there that is parallel to the top one here. So 3 points, we always need to draw a channel here. Alright? 3 points. That's all. These 3 points will define, will guide you, okay, will help you to make excellent, okay, decision when you are using Fibonacci. All right, so we have our channel now ready. As a bearish Fibonacci trader, we can now make our decision in a bearish channel. We do not want to violate the market pattern. So for instance, you want to day trade, you come to the daily chart, okay, you see Fibonacci retracement. So here it is, we are watching, okay, the top channel here. If it was a rising channel, we watch okay, the base. But because it's a declining channel, we are watching the top, the negative slope trend line on top of the channel. This is why we are looking for hot spot trending zone. So as a day trader, we see something like this. We see our 3 point, we draw it, and we see it's rolling it down. We are just praying to God or hoping that, okay, it roll it back to retest it on the dot, and we receive a sell signal here. You see how they solid boom down to retest it, okay, tall candles here. So we are watching the retest zone. So finally, because we are patient trader, you see, on the dot. So you will be smiling and saying to yourself, okay, hopefully we will receive a sell signal. If we receive a CSCWSY008 fire a sell signal here, I will take it. I will take it, all right? I will take it. So then we will use our Fibonacci drawing tool. We see that the price went down all the way here, not here, all the way here, all right? And then pull back right here, all right? So we join like this, all the way here. You see this low here? We are not stopping here because it went down from here all the way here before retesting it. Now that's why we are entering the trend. All right, so we want to see how much retracement. So it's not exactly 38.2 because it's a bit above it, but because it's a zone, you see the price top here. All right, it's a bit above. So myself like this, I will just call it, because if I draw the thing to the closing price instead of the week, you can see that it stopped exactly on 23. Let's say that there was a retracement, okay, let's say 38.2%. You may say 23.6. That's okay, but the key point I want trader to understand, all right, okay, or some trader will go like this. Let me remove it because you don't want to forget, okay? So we can also do like this if you don't want to go all the way down. So a very conservative approach will be that it went down from here to here. That will be better, isn't it? So went down from the last move down is from here to here, and then it pulled back to the, okay, 23, 38, 50% zone. Okay, he went almost to the 61.8, but I will call it 50%. Okay, that's it here. So what we will do in this instance, okay, this is very conservative approach instead of going all the way up here. So we will use again our measuring stick. So we see that it went down to this level. Too many drawing, my apology to traders. I'm going to color my measuring stick. If you haven't watched the previous video, you may not know what I'm talking about now, but just follow me carefully. So we see it went down from here before pulling back to the 50%. In normal condition, Fibonacci trader will say, okay, you will go down to the 150% zone. Some trader will say you will go to 127% Fibonacci extension zone, blah, blah, blah. The key point traders should remember is that the price will move from one level to the next level. So price going down, the price looking for a better support level. So we can just draw our support level and watch them. You see the first one, how the tall candle brought it exactly to this level here. It's the first and nearest support level. This tall candle. Alright? To the next support level. And then you can take profit and wait. It did below it again. So if I play it that way, remember that I draw my pink line, which I'm going to show you how we'll deal with that soon. So the first and nearest support level, according to the language of the price, is this one here. So I'm just going to draw, highlight it, and say, okay, price going down, price looking for a better support level. So you roll it down, you see, stop. I may decide to take my profit, which I will do myself, and just grab it and know that I bang that one and watch it. They roll it down a bit, you see. Again, look, this one, try to retest it. The pink line, D below, retest it, went even deeper, but just close below it. Down again. Now it's going fast, isn't it? After retesting it here, alright, now it's going down more, alright, to the next level again. So you will say, after this level, so you watch this level here, below, see how it came down to the next level again, before pulling it up. And then after that, so if I go step by step, because traders say to me, George, what's the exit strategy? Oh, exit strategy, next support level or next resistance level if it's going up. That's the most conservative way. Don't bet on anything else, okay? So that's the next support level. Just draw them because the price is going down. That's why it's happening. So the third one is here and the fourth one is here. Look how the price, okay, see? So he went to this one, went back up, and then push it down, went to the second one here, and to this one straight away here. Alright, and then consolidate before go down again. If I color this one again, see how the price going step by step. Break below, retest, turn around. Break below, retest, turn around. Break below the green one again, come back, retest again, down. Okay, you can project the channels. Okay, that's a different matter. It's just rolling step by step. Alright, it looks simple, isn't it? But when traders are trading, sometimes traders get confused or they miss all sorts of trading strategy, and I mean they end up making the wrong decision, which is very bad. Alright, we all do it, but it's not good. We want to stay focused and make estimation. Going back to my drawing stick, so because we see that okay, the price went down, the last move down before the pullback to retest from here to here. Are you following me? Okay. Are you following me? Okay, can you see? Last move down, went down, and then pull back to retest. So instead of drawing all the way here, which some trader will find difficult, so last move down here to here, step by step. So as you're rolling it down, we use our measuring stick, which is the pink line, projection to the pink line. Because the last move down is from here to here, we will expect it to repeat at least the length to this level. So we can draw by using our measuring stick, which is the pink line. We will draw a line there. See? Exactly there. Stop there, turn around, and retest it before going down. If he did below it, okay, so if you sold it again, so now it went out to this level. If you want to use the measuring stick, you will say again, okay, it did below the next level, you will use again. You won't put it here because you start from the first target down. That's how you use the measuring stick. So our next target will be another green line that I'm going to put here. You understand? Okay, and it came here. If it did below our target zone and retest it and start going down, we will use again from this green line again down. You see? Can you believe it? Exactly there, the price did stop. Gorgeous, isn't it? Yeah? Using the measuring stick of the previous move before the retracement. Down before the retracement to give us with that measuring stick down, okay, and then down again, and then down again. Here, remember, you don't have to put it here. You have to start from the previous target zone. This was our first target. So once you reach the target, we just put it there again and wait for the price, but don't sell here. Wait for it either to break below the previous key level and to retest, which it did, but it went too far in. All right, that's why it's better to take a value signal. And because the smart money want to sell here instead of selling in the middle of nowhere. So they brought it all the way here, which is a safer place, a low risk point that they can sell. For swing traders, always one must consider the risk reward ratio, all right, before entering a trade. And at a low risk point, this is here, this is tricky. In the middle of nowhere, where do you play your stop loss? Up here. So the smart money prefer to sell here. But you see how the measuring stick has allowed us to make excellent decisions. So for a Fibonacci bearish trader, 3 points we need to draw our bearish channel, and our primary market pattern is the declining channel. We have our 3 point ready. We are watching it. The move from the third point down, we use it as a measuring stick. As you touch it here, we do not just sell as aggressive traders. We use TSCW34 or TSCW08 or any value trading tool to enter the trade. Using a top-down trading method, we will check. Because you're on a daily chart, be curious. Check the weekly chart, check the monthly chart, check the yearly chart. Don't just make a decision on a daily chart alone. 3 time frame at least you need to make a decision. The setup, the signal time frame, and the entry time frame. Taking it step by step and using your Fibonacci tool step by step without forcing it. Do not assume anything that it will definitely turn around here. It will definitely reach the target zone. Nothing like that. Just go step by step. Okay? Alright? So use your measuring stick, and if you understand Fibonacci extension, you can use your Fibonacci extension, just draw it on your chart, but do not assume that the price will definitely reach the Fibonacci target zone, but the price will move down from one support level to the next support level as the price is looking for a better support level. This is just a few tips for Fibonacci bearish traders. Thank you for watching, and we will speak to you very soon. We are the TSTW traders talking about Fibonacci bearish traders.